Good morning, good afternoon, good evening, and welcome to this ShipTech session. Is Ship Finance Transforming Faster Than Shipping? Brought to you by the Maritime Online Series. I'm Gary Howard, Europe Editor at Seatrade Maritime News, and I'll be your host and moderator for the next 60 minutes for a discussion on green finance in the maritime sector. Let me start by thanking our panel, who I can see are raring to go in the green room. We've got a lot of knowledge on this panel gathered here. And with that in mind, we have a Q&A function to the right-hand side of your screen. If you're full screen, you might just need to minimize to access that. Get your questions in. I'll be personally keeping an eye on the Q&A and passing over questions to the panel as we go through. If you're worried about taking notes, don't panic. This will all be available on demand just as soon as we're finished and YouTube processes the video. So you can share that with your colleagues that couldn't make it to the live broadcast. With all that covered, let's bring in the panel and get straight into our topic. Good morning, panel. I won't do the boring bit of reading through each of your bios one by one, as I find that quite tedious. But let's start with a softball question each, so we get an idea of where you're coming at this discussion from. And I'll start with Jan-Henrik Hubner from DNV. I expect most of our panel know DNV and what they do, but I think your position within the company is slightly different to what you might expect. Could you explain your work at DNV? And then from that position, where do you see the main motivator for decarbonisation in shipping right now?
Sure. Thanks a lot, Gary. Indeed, the traditional role of a classification society is to take care for safety of ships or the crew of the cargo, but that has widened over time. We dedicate significant shares of our R&D funds to decarbonization and other environmental aspects. Decarbonization plays an even more important role for our advisory units. Already when I joined 11 years ago, decarbonization, energy efficiency made up for possibly a half of our business. Those days it was then the regulation coming with the EEDI, the SEMP, those days increasing fuel prices. And in 2011, we also did our first green finance project. I may mention the KfW IPEX Bank, which those days started to take energy efficiency into account for any new financing decision. While we've been working a lot on decarbonization and green finance projects since then, it gained more momentum and accelerated again over the last 2 years, especially. One aspect was the Poseidon Principles. We serve a number of banks getting their Poseidon reporting done, but more importantly, to make use of the data we are collecting. To understand what really drives the energy efficiency and what levers are there. And another aspect of the last 2 years is green or sustainable finance, where we support shipping companies in getting access to a green or sustainable finance by providing the second-party opinions. There's probably one credible new inquiry per week at the moment. And we are regularly recommended by the banks to the owners because the banks trust our opinion there. And of course, besides Poseidon, besides green finance, we are collaborating a lot with owners and with banks in many other aspects of decarbonization, left and right from these two service lines which I mentioned. Gary, I think you asked me about the motivator for decarbonizing shipping. I would like to say shipping is highly intrinsically motivated and we do everything because of that. But honestly, I think that's a few. For most, it needs also some external motivation. External motivation coming from regulation and coming from market demand. On the regulatory side, we've been seeing the CII and the EEXI being introduced by the IMO lately, and market-based measures are on the horizon. we may say that the IMO may have been pushed a bit from other stakeholders like the EU, who introduced the EU MRV system for data collection as a first step towards market-based measures. And of course, as I said before, we have the banks with the Poseidon Principles. And I think it's not coincidence that Poseidon Principles and the CII of the IMO have the same KPI, and both use downward trajectories. Yeah, that's the push of the banks, which also then pushed the IMO to accelerate a bit on that. So yes, there's some intrinsic motivation, more or less with different players, but this external motivation also contributes. But overall, I'm not at all worried or concerned about our industry. Regulation and decarbonization will make shipping more expensive, but both will have little impact on the profitability of our industry. So no worries from my side about it.
That's interesting. We'll find out if the rest of the panel agree on your point on profitability later on, I'm sure. Let's move over next to Sean McLaughlin. Sean, looking at your CV and Holder's presence within this discussion, does this mean that Holder's now arranging ship finance? Could you give us an outline of your work and Holder's position in that sort of interplay between finance and shipping?
Thanks, Gary. I think with that question, you've probably sent a shudder down the spines of a lot of engineers within Holder. The simple answer is Holder is a long-standing technical engineering and naval architecture business, and that's what it continues to be. But as you've heard from Jan, it has a similar diversity policy in that it allows people like me into the fold. And a lot of what Jan's just said is exactly what Holder is saying. There's the traditional community of clients are looking for a different sort of technical input in terms of managing that risk of decarbonisation, but also the financial community are needing to not only look at the compliance side, but to look at where there might be opportunities to invest. My background, Jan, I think, has a background with McKinsey. My background is with organisations such as Ernst & Young, where I spent a lot of my life arranging finance. The two key things dealing with both debt and equity providers that I found in pretty much every transaction I've been involved in is that you need a decent management team with a decent strategy. There's an old maxim in private equity that you'd invest in a bad business with a good management team a long time before you'd invest in a good business with a bad one. And I think the reality is that we're all going through an industrial revolution now. Decarbonisation is going to have as much impact as the world in general saw during the 19th century from the change. That brings with it risk, but it also brings a lot of opportunity. And management teams and businesses in shipping and everywhere else who recognise both the risk and the opportunity and have a plan are the ones that are going to get backed by all sorts of different finance sectors. I agree with Jan around the generic comment about profitability. When we look at container freight rates at the moment, people are still buying from Amazon and charterers are still paying the rate. So that elasticity in terms of the actual price of the ship is pretty small. The reality is, though, with the change we're looking at the moment, it is pretty fundamental. The cost and the time involved in making changes, whether that's by way of retrofit or new build, are both substantial. Simplistically, if you're the guy with the A-rated ship when everyone wants A-rated ships, then you're going to get a great return on investment. But if you're not quite sure what the demand is going to be and when it's going to come, it is quite a difficult investment decision. So over 20 years, it won't make any impact on profitability, but there's going to be a bit of a roller coaster ride, I think, certainly for some organisations in terms of the timing of those investments. Just to again echo one of Jan's comments, I'm probably with the world in general disappointed with the pace of change with the IMO, but it's a ship that has a maximum steaming speed. There's a huge amount of focus at the moment on EEXI. Don't underestimate CII. I think CII is going to be have quite a significant impact. It's taken an impact that Poseidon has already delivered through its relationship with banks into the market in general. So don't even underestimate the changes that the IMO is driving.
Absolutely. That echoes something that came up in one of the earlier panels during the Maritime Online series, where EXI was described as a sort of ticket to this decarbonisation game, but really you were there for CII, and that's what you needed to be keeping your eye on. Again, plenty of other things we're going to pick up on in there, but let's get George into the melee with a very similar question. Could you describe your role at InterUnity and InterUnity's work and perspective on decarbonisation and shipping finance?
Sure thing. So I'm my name is George Mangos. I'm a co-principal of InterUnity Group. InterUnity Group is a let's say a hybrid between a traditional shipping company and an asset manager. Since we're partnered with a number of large institutions, we run about 70 vessels today in various asset and debt structures. We have a commercial operation of tankers and technical management and so on, and we try and sort of integrate all the services. And our view of decarbonization, I suppose, is reflective of our position as an operator in the space, and our own, let's say, particular credo, which is that there is an urgent requirement to decarbonize. However, along with many other operators, I think we sort of feel we're trying to find our way through the oncoming regulation without getting scalped, because shipping doesn't have the best track record of implementation of major regulatory change. And we look at the way, for example, ballast water was implemented and so on, and these can be rather chaotic. And to echo previous comments, I think we're trying to find ways to turn what can be, let's say, a significant operational threat into something that is an opportunity and something that we can look forward to in a positive way.
Ballast water, a very interesting example there that I've made a note to come back to later. But last but certainly not least, let's get Paul on board. No prizes for guessing the outlook of a ship owner that's bold enough to join a panel discussing green finance. But Paul, please tell us more about your role and Ardmore's work and your sort of view from this brackish water where the rivers of money feed the oceans of shipping.
Thanks, and good morning to everybody, and good evening in many parts of the world. But I'm largely going to echo what the previous panelists have said, and in terms of the risk and opportunities. But quick background on myself: I'm the CFO of Ardmore Shipping Corporation. We own and operate a fleet of product and chemical tankers, 25 ships owned, 31 in total, including chartered in and commercially managed. We started business in 2010. I think we were the first company to order eco ships, actually. They delivered in 2013, so the first eco-design electronic engine in 2013. So we've been at the forefront of eco for many, many years. I remember a presentation that we gave to our bank group in 2013 before we went public, and Mark Cameron, our Chief Operating Officer, gave a presentation on eco and what did eco mean. And was it economical or was it ecological? And at that point in time, it was all economical because you could buy a ship which was much more fuel efficient than the previous generation. But very quickly, it's now ecological. Now, it's not economical, is not completely out of the equation, but very much the focus now is on ecological. And I completely agree with the guys. It's EEXI is a design index that's got a lot of attention recently. But the CII indicator, which is an operational measure, that's the one that everybody should be focusing on, and I think that's the key to unlock here, and that'll take account of everything we do to our ships, including retrofits, including everything to kind of improve the overall performance of the ship and the CO2 emissions level. I guess I'll pause it there. A quick uptake on the financing side. Look, this is something we've been working on for some time. We were one of the first companies, I would say, maybe not the first, to do a sustainability linked financing. We did that with ABN AMRO in the middle of 2019. And I think since then they've gained momentum in terms of the approach, in terms of the measures, and really I think you're going to see that ratchet up over the next couple of years in terms of kind of the impact of it. A couple of years ago it was small improvements in the margin, but I think you're going to see that much more meaningful in the years to come. And the key thing from a financing point of view will be access to finance. It's pricing and all of this stuff will come out in the wash, but I think access to financing is going to be key. And I have to say hats off to the banks for kickstarting this with Poseidon in 2018. It really ignited a fire amongst ship owners to really start taking it seriously. It created an incentive, and it's now we're 2 years on, and we're hopefully at the gathering momentum and going to get to a very good place.
Great, and without meaning to blow smoke, I remember Ardmore CEO Tony Gurney took part in a tanker industry conference that I organised, I think in 2012 in Copenhagen, and I remember him sort of standing out among the ship owner representatives there because he was very much sort of banging this efficiency drum, which in fairness was the same drum that all the class societies were banging at the same time, but he seemed to be kind of ahead of the game on that. Have you felt any benefits from? Often in this space, it's everybody wants to move second. They want somebody else to take the lead, and they can come up and do what's tried and tested. Do you feel a benefit as an owner of having taken the step first?
That's a great question, and I think the step that we took compared to the step that people need to take over the next couple of years is, I think we've got bigger challenges ahead. But absolutely, we've really benefited from and coming out the gate with a very eco fleet. The majority of the fleet, 80-90% of it, are all eco design, built post 2013 or post 2014, in fact. And then we've had some secondhand ships that we bought. We really did a lot of work analyzing ships in terms of their configuration and design, and finding ways to retrofit ships that could be retrofitted, and then finding ways to retrofit them to bring them down as close as we could to the eco design ships. And yeah, we've benefited a lot from that. I would say the first one would be performance. I think we've always felt that we can outperform on a relative basis, given by the profile of our fleet. Now the fleet profile has changed, so maybe that benefit is not as great as it once was. It's also giving us good access to finance. I have to say we've always had a great support from the banks. They do want to support progressive companies. They do want to support very good fleets. And likewise with investors. We went public in 2013, and investors were very keen on perhaps from an economic standpoint what would be the next generation of ships, but also there was a key focus on longevity. Just having a high quality fleet that could run and that could weather tough markets and still perform. So performance number one, access to finance number two, but also number three, access to customers, and that's growing in intensity now. Customers do want very good ships and very good fleets and very low emissions. So over the past couple of years, we've managed to cultivate those, and I would say one big advantage, which I kind of touched upon, is having a very good fleet does mean that you have an ability to work through tough markets, because your fuel cost is lower. You continue to get access to business when the markets might be weak. If the charters have a choice of 10 ships and 2 of them are high quality eco, they're going to choose those. The rates will be what they'll be, but getting access to business is important. So yeah, we've definitely benefited hugely over the last number of years by having a high quality eco fleet, and I think that'll be even more prevalent going forward.
And Sean, this is very much in your area of work. In fact, if you'd like to, afterwards we can get that snippet of video so you can show to your clients the benefits of all this eco work being done to the vessels. We spoke before about this idea of vessel based wins from Holder's point of view. I wonder if you could sort of expand on that idea for the audience.
Yeah, I mean, the conversation we had previously was around the focus on the ship. So I think the first point is start with the ship. So the solution to the problem is based on the dynamics of the ship and its operating environment. I think the comment you're referring to was that you need to look beyond the system of the ship itself and look at its whole operating environment and the system that sits with that. So we have a client where about 12 or 18 months ago, we did a study on how they could reduce their fuel consumption and through that reduce their carbon footprint. And we found that simply by introducing an automated docking approach, they had an opportunity to save 25% of their annual fuel. That's a big number, isn't it? It was a particularly specific issue because it was an operator where the time in port was a significant part of the overall operating cycle. So a reduction in the time in port meant a slower journey for the same operating schedule. So I think it is a question of looking beyond the vessel itself, but also the fundamental message is start with the ship, don't start with the technology that someone's trying to sell you.
Yeah, and throughout this series, you say there's a 25% improvement there. Throughout this series, we've had these examples come up of where there are some really big wins to be made from taking a more sort of holistic look at the operating profile of a ship or the impact that a technology could have. As we're sort of in your space, Jan, let's come over to you and just. I wonder if you could give us an idea of the sort of enthusiasm that you've seen from owners and operators when it comes to decarbonisation, and whether or not this varies by industry sector or by geography or any other metric.
Yeah, I mean, as I said earlier on, the enthusiasm has been a bit sparked also by external stakeholders, so by regulation and markets and fuel prices and so on. Do we see differences between geographies? I would say among the owners, not so much. Among the banks, yes, obviously. I mean, it's North and Western European banks and now Japanese banks who signed the Poseidon Principles. So there we are lacking China a bit. But as I see lately, after EU taxonomy has been made for green finance, now Asia is making a green taxonomy. Or taxonomy for green finance. China is doing something on this. So I think that's also getting global. So geography, I would say no. Surely there's a difference between ages of fleets. If somebody has a young fleet, he of course favors decarbonization more than somebody with 15-year-old vessel average age. Says I'll sail them for a bit, invest a little in the meantime, and then we'll see what happens. And yeah, by the way, we've been working lately for a bank with 100 to 200 vessels, let's say, all segments on average pretty old, 11.5 years. And looked at what measures can be taken, to comply with the EEXI. Quite obvious, people do engine power limitation, but that helps you hardly anything, or maybe just 2% or 2-3% only with your CII, and then what measures are to be taken for the CII. And that a bit can come back to previous comments of Sean, especially. I mean, there's a wider range of levers which is there. Some are operational. I mean, there's some aspects of better voyage execution. Of course, many people will say I'm doing it perfectly since 20 years, but in reality, people know that there's a few more percent to gain, of course. Then there's all the various technical measures, whatever, propulsion improving devices, propeller, and so on. So 10 others. And there's speed. We will have to talk about speed when looking at the CII. And there's, of course, drop-in fuels for the existing vessels. So not so much, as I said, on the geographies, more difference on vessel age, and also to back to Paul, the decision earlier on to build an efficient new vessel, that's, I shouldn't say a low-brainer. Of course, you would now do that as efficient as possible with taking all levers. The fuel choice is obviously a more difficult one going forward. But maybe I should stop my talking now, because I think that deserves a separate conversation with all of us then.
Yeah, these conversations always seem to spawn about 100 other conversations that we could have. But George, I feel like I've left you alone for too long. I need to put you on the spot. Give you a chance maybe to go off on this the interaction again between the shipping industry and its financiers. At the moment, it seems like there is an incentive to go green, but I wonder if perhaps in the future there might be a downside to not doing it.
I certainly think so. I mean, of course, a regulatory framework is itself, let's say, the stick, and I think we've all been very, very keenly aware of the oncoming, let's say, stick element. Perhaps we may be less aware as an industry of the carrot side of the things. And I think, look, financing is a critical piece in a very capital-intensive industry. So, as obviously has been said, if you are moving the needle from the financing point of view, you can have a very, very large impact on the industry. And I think what we're seeing here is a kind of like a confluence of environmental targets. And if you look at it from a kind of macro perspective, unlike certain types of issues that are very industry specific, I mentioned, let's say, ballast water systems, and that's not a problem, let's say, that most people are particularly aware of. However, everyone in the world, or most people, let's say, in the world, are very aware of global warming, climate change, and so on. And this is we're now in a position where I think we're very much seeing changing tides. So while at the same time ship owners may be interested to say, okay, well, looking forward, what do we want to invest in? Yes, we want to go forward with green technology and so on, but it's expensive. How are we going to do it? You then find that there are banks that are very interested to support eco projects, because that then helps the banks meet certain environmental targets that they have. You may find private equity firms, for example, that may be there to help you top up to get to the, let's say, the capital structure that you need to go forward, and they will be prepared to take lower rates of return than they would ordinarily, because they get to meet their environmental targets. And this confluence is extremely positive, and it will help, let's say, pave the way for the projects and for the whole transformation of the industry. Where I think we're lagging is in exactly as we just heard, in trying to understand, well, what exactly is the next technology that's going to come? Because there's each, let's say, successive wave of eco, and each generation of eco coming, in fairly, let's say, short order. And it's not very clear what necessarily the next step is going to be, and particularly I'll echo the point on fuel sources, because I think that's now one of the biggest choices that we face. So you say, okay, I have my capital structure, I have my banks that are ready to support me to do this project, and it's going to be successful even with a lower rate of return. But what do I pick? What do I choose? In order to maximize the impact. If that makes sense.
Absolutely, and it's surprising that these better rates can be found for the green projects, especially when it seems there is so much uncertainty coming up and therefore so much risk inherent.
I would say when we had a discussion a while ago, and we had been looking at some at a couple of quite large scale projects with, let's say, with fuel source support, and we were able to obtain government-backed grants, in order, let's say, to help ease the bitter pill. But my enthusiasm is somewhat tempered from the time that I might have had slightly rose-tinted glasses, to the extent that I I suppose it's encouraging in some way that the demand for obtaining this kind of financing, for obtaining this kind of support, is far, far, far larger than the scale of the support that is offered at this time. So I think we do have a long way to go before, but at least what we're seeing in these sort of changing tides, and we're now at a point when everything's a little bit in the mix. It's positive, but we have a long way to go.
Jan, I see two polite hands. Let's go to Jan first, and then we'll come back to Sean.
Sean first, I guess.
Oh, sorry, Jan, fire away.
Yeah, thanks a lot. I mean, as said, we are working a bit with ship financing banks, and they are obviously not only active in ship finance, but all of them have dedicated some 100 billions for green and ESG related finance projects, where maritime or shipping competes with other industries. But if you come with really green projects, the doors are extremely wide open with the banks to get funding there or to get finance there at slightly favorable interest rates then. So I'm not too worried about it. Of course, there's also people trying with not really green projects asking for a green loan. That obviously doesn't work. But if there's something really green, I think there's no scarcity of money at the moment. It's rather that the ship finance people of the banks are looking for good green projects which they can bring forward in their bank, because it feels they have targets also to have green or sustainability linked finance. So I think the door is wide open.
And Sean?
Thanks, Gary. Not to disagree with what either George or Jan have just said. Certainly at the moment, in shipping at least, there's a scarcity of green projects, and there is green money looking for it. Just to give you a word of caution looking forward, I remember in 2015 I went to an old-fashioned seminar in London where you all sat in a room, and it was about green bond issuance. And at the time, I think the general view was that green bonds were a nice, shiny marketing piece where everybody wanted one. There weren't many around, and therefore, surely they're going to be a lot cheaper than everything else. There was a lender there who said, "Don't forget the word bond. It is still a credit risk. It will still be priced based on the underlying credit risk, and in time, you'll find that the word bond becomes more relevant than the word green." Now, my view is that in a relatively short period of time, pretty much all finance is going to be green. So don't think that it's a cheap alternative today. I think looking forward, it's going to be the only alternative. I echo the positive words that Paul gave to the banks in terms of signing up to Poseidon in 2018. I'm sure there was a lot of good social intention behind that, but the real driver was a hard commercial fact that if you don't recognise the impact of climate change on business, then those banks will end up with loan books which are worth nothing, because the underlying assets that sit behind that lending will be worth nothing. That's the real driver behind Poseidon, and I'm not critical of it. That's what business is about. The Bank of England carries out an annual stress test on solvency. They carry out a biannual exploratory test on various subjects. This year, it's on climate change, and they're stress testing the UK financial sector on the impact of climate change, everything from the physical impact of what will it do to individual businesses through to the underlying credit risk. So I think a simple thing for people to think about going forward is that this isn't about finding a bonanza of cheap money to carry out some projects. This is recognising a direction of travel. If you don't recognise that, you'll have a problem.
Oh, sorry, Paul. Paul, I think you are muted. Sorry.
It's what happens when you chime in unprompted. But I just largely to echo what Sean was saying. I think that's absolutely right on Poseidon. If the banks did not do something and they continue to finance older assets and assets that are not performing very well on CO2, then in a weak market, those ships will get badly impaired. And you're seeing that already. If you go today to the leading banks, the Poseidon banks, and you try and finance a ship that's over 12 or closing in on 15 years old, you won't get it. So you have seen over the last 2 years a surge in alternative lending providers, which are now kind of providing mezzanine financing for older ships or midlife ships. So you are seeing almost like a bifurcation of the shipping finance market to kind of high quality, very modern ships and a clear focus on decarbonization, and others who are kind of asset plays and focusing on midlife ships and less concerned about CO2. Higher risk stuff with higher pricing attached to it as well. But no, largely to echo Sean's point, that's 100% accurate, and it's what we're seeing today. And banks have always been selective, but now they've another reason to be selective.
George, did you have something that you wanted to add to that?
Yeah, I suppose I would say refinement on a point. I don't think there's necessarily cheap money, or let's say a bonanza of cheap money, so much as the money has to be cheaper in order to let's say take away some of the associated costs. And the particular case that or two projects that we looked at, one which was for container vessels and one for dry vessels with LNG fueling solution, smaller container vessels, I should say, because the economics work a lot better on the big ones. The projects were very hard to make viable, even with the cheap money, without the government grants behind it. And it is the government grants, and this is, by the way, aiming for mid-high single-digit return. So very close to let's say a baseline of risk that one would accept in shipping anyway. And the government grant part was massively oversubscribed. So I think that there is a lot of enthusiasm to try and get things done, but I think we're still not in a position where most of the projects really are economically viable yet, and that I think requires a lot of work still.
That is an extremely difficult position to be in, and again, something that was picked up by Di Gilpin in our last panel, saying, give an example of offshore wind, where really it was the credits from the government that managed to get this technology matured enough so that it could become the absolute behemoth that it's become today, this viable industry that's worth investing in. Now, just to take a quick breather from a conversation which I'm about 7 minutes overdue on an ad break we should have run because it all just flowed too nicely. We're going to throw to a quick ad and then we'll be straight back. Very much looking forward to meeting people back in person at Seatrade Maritime Middle East, where I will also be putting together the conference program. So that should be great fun. I'm going to sort of pick up roughly where we left off. We talked about the pressures that are being exerted on the industry. I wondered whether they combine to create a sort of consolidation pressure on the maritime side of things, and whether there is still room for small and medium-sized owners to operate and to access finance. And I see that George has got his hand up already. So there's my first victim.
I wanted to actually segue directly from what you were talking about before, because you mentioned the example of windmills, and I think that's a very interesting one, and it strikes at one of the fundamental problems of shipping. Now, the windmill project, or any windmill project, has, there's an identifiable location. It's planted there. They produce electric energy that plugs into the grid of a specific country, and therefore the government support that helps the industry mature is much easier to obtain. Shipping is stateless in many ways when you're comparing, let's say, to something that's a fixed asset in a fixed location. And it's actually much harder for governments, or it's much harder for the industry, let's say, to convince governments to give it this level of support, despite its incredible importance. And I don't think you don't need to just look at something like decarbonization to see it. I think a very recent and very significant operational challenge, which is getting crews on and off vessels in times of COVID, you're seeing exactly the same kind of problem, because much as any individual government or any official that you will talk to, even supranationals and so on, you'll say to them, listen, you have to understand that the lifeblood of your economy is absolutely dependent on shipping. They all get it. But when it comes time to actually taking the steps to saying, okay, well, we're actually going to support you here, we're going to support the industry, we're going to support the people on the vessels who are so critical to the global economy, very few of them actually are then able to say, okay, we accept that there's going to be an element of risk here in terms of COVID and so on, but on the balance of probability, on the balance of risk, it's important, and people just get hammered on it. And I think this is let's say a wider problem of how shipping is perceived and how the industry needs to be supported in decarbonization. I don't know if you can see how I've sort of made the link here, or if it makes sense to you at all.
Absolutely, it does, and I think it's a sort of central issue. Yes, we'll come to you both in just a second, but this is definitely a central issue that comes back, especially in this decarbonisation debate, because it makes it very difficult, for example, to assign those emissions to certain parties, for instance. But Sean, I saw you had your hand up as well, so why don't we go to you first this time?
Yeah, just to pick up on George's comment there, I think there's a great lesson from a PR perspective that the shipping industry can learn from offshore wind. So back in 2005-06, I found myself trooping around Europe with my backpack, looking to raise money for turbine installation vessels. At the time, the offshore wind industry generally was running a PR campaign to try and get government support. And the big underlying message that they had out there in all the newspapers was, this industry is not viable without government money. So I found myself turning up at private equity institutions, and guess who else was reading those newspapers? And the number of private equity institutions that said to me, look, looks like a great proposition, but this industry can't survive without government money, so why do we want to be in it? And it was a problem that the supply chain for offshore wind experienced for a good 4 or 5 years, from 2005 onwards. Back to one of my earlier comments, this industrial revolution has opportunities as well as threats, and the industry as a whole needs to talk more about the opportunity, I think, otherwise it's in danger of falling into the same trap.
And Jan, you had something to say on that as well.
I mean, of course, as probably all of us, we like the warm rain of governmental money too. But I think in the beginning we all agreed, either explicitly or by not denying it, is saying higher costs of regulation will not make the shipping industry less profitable. So I think we should jointly then vote for whatever emission trading or carbon taxation, whatever it is. It's basically two sides of the same coin. So having a carbon price, and if for the remaining lifetime of the vessel, which is being built now, whatever, the carbon price is 100, 150 or whatever it is, dollars a ton, that of course helps a lot of projects to or helps us in a lot of projects to decide for the greener and for the decarbonized choice. If we had such a CO2 price, I mean, it would come anyhow, irrespective if some government in this country or that country would give a special subsidy or a capex subsidy for a specific project. Yes, we may need that to kick off certain technologies in the very beginning, but I think longer term, confidence in a significant height of a CO2 price helps us much more.
Okay, and I wonder if we could come back to before that excellent move away from the topic towards a different topic. If these effects that we're discussing, if they do create this consolidation pressure within the industry, is there room for these small and medium operators to access finance? Is it just going to be more expensive for them? George, I wonder if you would like to pick that one up first.
Well, again, I mean, any in a very capital-intensive industry like shipping, the ability to access that capital and being able to deploy it is extremely significant. But I would never bet against the small and medium operators who have, let's say, the flexibility. I think it was Paul who made the point. There's a lot of alternative lending that's available. I think there are ways, let's say, to make it to kind of stack it together. To speak to Jan's point, overall regulatory change, let's say, or in the long term, will not change the profitability of shipping. Of course, in the short term, it creates tremendous volatility. But I think being on the right side or the wrong side of that of a particular investment decision or that volatility, I think whether you're a large company or a small company, it doesn't really make a difference. It's let's say the quality of the decision making behind. So I think there's shipping has a very vibrant small and medium operators. I think the definition of a small operator perhaps may change. I think at the very small end of the scale, the future may be extremely challenging, and increasingly so. Let's say in this sort of globalized scale where you're competing against larger and larger companies, and especially where if financing creates a significant bifurcation between the small ones, so accessibility, let's say, to finance, then you may see the future of the smaller companies or the medium companies under threat. But so long as they have access to financing and are able to invest, I would bet on their ability to innovate and be flexible.
I'm sure they'll all be glad to hear that. We've talked about ship owners and we've talked about banks, but perhaps one thing we've not really touched on in this discussion so far is our cargoes and charterers. How important is our charterers in this evolution that we're facing and in access to finance and moving forward? And I wonder, Paul, if perhaps you could start off on that part of this discussion.
Yeah, great. And before I do, just want to completely echo George's point on consolidation. I think access to financing that's a key barrier or not a barrier to entry into shipping. So access to finance will be an important driver, but there is a lot of value in smaller companies and nimble and the ability to innovate and react to market conditions. I think I fully echo George's comments there. In terms of the cargoes, I think it's very important. But before you think about the cargoes, where's the real pressure coming from decarbonization? Largely the banks are reacting because of their own access to financing, and ship owners are reacting. We all want to be progressive, but from an economic standpoint, where is all the pressure coming from? And that's largely from consumers. So when you have companies like IKEA, for example, and they want to have complete zero emissions from the entire value chain. So they're putting pressure on their customers to say, not only do I want to have zero emissions from my products, but I also want zero emissions from my value chain. And that feeds then through to the whole cargo, the ship owner, the ship. So I think the cargoes, the consumers and the charters have an enormous role to play. But the main driver will probably be consumers. But that goes to the actual cargo themselves, where the cargo is derived from, not just the type of cargo, but the source of it, and is that a progressive region, and the types of ships that the charter select, and how they measure the data and the integrity behind it. So I think the cargo is very, very, very important, but I think the starting point is the consumer, and that trend drives the cargo, and the charter will respond accordingly. But as we think about, to broaden the topic, as you think about the solution to the problem, it has to be everybody. So it can't be just the bank or the ship owner taking the risk. It has to be the charter. At some point, the cost has to be spread around. And it's important for the charters to kind of understand that as well. You are seeing longer term projects now, which are on the face of it for more cleaner ships, kind of attractive returns, but nobody's really focusing on residual value risk. So I think there's a huge kind of melting pot of issues there. But back to the original question, cargoes is very, very important. That is the ultimate driver here, and that'll drive how we all behave.
And I think there's definitely something to be said for the type of vessel being quite significant as well. I mean, does it make sense, for instance, George, I think this might have been something that you mentioned in our conversation, or perhaps with Sean, this idea that if you power a VLCC by LNG, it doesn't really matter that much because you're still moving quite a lot of crude oil around the planet, and maybe that's something we don't want to be doing for the long term.
Jan made an interesting point. I mean, it's a little bit controversial, right? It's sort of not to name operator, because I think that would be unfair, but I do think it did stick out like a rather sore thumb, the idea that green financing was made available for VLCCs to be LNG powered. That doesn't really sit very well in my mind. There probably was better use for that. But in any case, I mean, like I say, I don't want to go out of my way to upset other industry participants. I
think that probably plays into the message that the LNG industry is trying to get across, which is to do something now. And I guess if the alternative is to move crude with crude, then perhaps that is worse. Paul, I saw a hand raised.
Yeah, I mean, as a tanker operator, and I'm going to stand up for the sector, but I think, look, ultimately we're a service provider, and for as long as there's a demand for oil and oil products, whether it be for kind of transportation or road fuels, which is the dominant user of oil products, but it's also petchems, and all of the in the pre-conference we talked about the difficulty in getting goods and commodities for house construction and for white goods, etc., because the supply chain is also clogged up. But the vast majority of those products are derived from oil in some way, shape, or form. So I think there is, on the face of it, you'll say, why are we shipping crude oil? We should move away from it. Absolutely, but there is still a need in the world for oil. We have not found alternatives for all of these other products. So I think from where we stand, we should not be in any way apologetic or ashamed of what that we do in terms of moving oil products. It's the building blocks of the economy, and what we have to do is actually do it in the most efficient way and in the most environmentally friendly way, and be really part of the solution. So I agree. We've had this thing before, that it's when comments when transactions have been announced, and on the face of it, you kind of scratch your head and go, well, that's not green at all. But when you stand back and go, if there's a real incentive to do a core service and provide a core service around transportation and shipping, and there's an incentive to do it in the most efficient way, in a progressive way, I think it should continue to attract financing. But I think, to George's point, we should continue to dial up the expectation there, so that it's not just, we're not making kind of gratuitous, greenwashing and sourcing financing for something which shouldn't get the money.
Yeah, over 100 years of building our entire world economy on the back of oil probably takes a bit longer to unpick than any of us can really appreciate. We're sort of alongside a question that I wanted to put to the panel, and again, this came up in another session. You should definitely check them out. We've had some excellent conversations throughout this series. But the current example of the dry bulk industry was brought up when it came to decarbonisation, and one of our panelists said that with the rates as high as they are, I don't think anyone in the dry bulk sector is limiting their speed or their emissions to adhere to any sort of green incentives. The money's on the table, and it's their job to take that money as a responsibility for shareholders or anything else. Is this going to continue to be the case in the industry, or will there be mechanisms in place to actually be able to override these commercial incentives to pollute, which I think sound like they might be quite necessary? The sort of covenants that we're talking about in lending, will they reach down as far as that? I don't know if we have any particular victims for that question.
I'll put my head on the chopping block first. And I'll say, actually, to Paul's point, Paul makes a very fair point, which is the fact that, as he says, I do differentiate, at least in my mind, let's say crude product from other forms of refined product and so on. And yes, crude products will be moved around the world for quite a while, at least, and so we might as well be doing it in a more efficient way. But I think turning to the point of let's say speed limits, it seems to me like a rather blunt instrument. I think there are better ways to tackle the problem. There are technological, evolutionary ways to do so. And to Jan's point, I believe that a carbon trading market has been effectively applied in other industries and acts as a major incentive for the industry to let's say to be able to evolve. And I think perhaps I think that is really what's in the cards for shipping. I don't think it's necessarily fair to say shipping is such an important component of global economic activity. It's the very lifeblood of sort of moving things around. And part of the rate rises here, and I don't think it at all it is an issue of greed. We are service providers. We're asked to move things from A to B. We're living in a time of extremely heightened trade friction because of what's happening with COVID. And I think shipping and the seafarers at the very front of it, let's say, are going above and beyond to try and deliver these critical things around the world so that the global economy can keep going. And of course, part of that is to be able to generate the necessary returns for everything, shipping included, to be able to improve its position in terms of emissions. So anyway, I don't know if that sounded a bit snippy.
No, not at all. And Sean, I saw a hand up there, and Paul will come to you next.
Yeah, sorry, just to pick up on a couple of those points. I think one of the problems, and this isn't peculiar to shipping, is that everyone thinks that there's a silver bullet, so let's wait till it comes. Let's start with the baby steps. Let's find improvements all the way through. Not to get into the LNG debate, but why shouldn't a crude tanker be less polluting next year instead of saying let's just focus on not having crude tankers? The effect on the climate is cumulative. So we need to start now, not at some point in the future. Taking the other question though, in terms of the rates are great, should we not just harvest them? Going back to one of my earlier comments, globally, CII will catch you out if you take that approach, and it might be a great cash flow item for this year, but it's not a great long-term strategy. Equally, if you look on a more local basis, the EU has already published what it's going to do now, and I suspect what it does now is going to be a pale shadow on what it will do in the future. I'm pretty sure that the UK will come out with something along the lines of the European ETS. We'll probably have to say that we thought of it first, but that's in the UK. But don't forget the US. I mean, the US does have a strong view on climate now. Hopefully it will last more than 4 years, but and the US is a big part of shipping, both in terms of the actual volume of activity, but as Paul will tell you, if you look at public markets, it's a pretty big source of finance. So I don't think there's any reason to do nothing, whether that's because doing something is small or whether it's because rates are great.
Sure. And Paul, I saw you had a hand up there as well, and this might actually be our last comment as it will.
Well, I think we should on this topic. I think we should leave the last comment to Jan. But I largely want to just echo what George and Sean said. I think if shipping companies are speeding up and they're making buckets of money, a carbon tax is a very good way to harvest that cash both from a climate change point of view, and then redistribute it. So if there was a collection mechanism for all of this taxes, and then redirect that to innovation and tech, you're doing your best to solve the problem. So I think George is absolutely right. You ship owners, we've got a responsibility to provide a service, and if your customer needs something quickly, and the supply chain is in that stage right now for containers and dry bulk, we have to try and respond in a responsible way, and keep the economy moving. But carbon tax would solve that, and then it would allow redistribution. But I think Jan has probably a much more kind of deep thought opinion on this, and probably fair to give him the last word.
No, but I'm happy that we all agree basically that some carbon pricing, be it as a tax or as an emission trading system, makes much more sense than any strict regulation. Every container vessel must only do 12 knots or something. Then people shall have the freedom of choosing the measure to doing the carbon abatement. And if that is slower steaming or using drop-in fuel, shall be an economic decision then. So let's get a predictable carbon pricing in place, and then we don't need to care about all these other regulations anymore.
An excellent last word, I think. I'm afraid we are out of time, so I'm going to have to wrap things up and start by thanking our panelists who have done an excellent job this morning, and thank you, the audience, for tuning in. There's one comment here, just quickly, Sean. Just been told that the green bond market has expanded hugely since 2015, from 30 billion to 507 billion. I don't think that really softens your point at all, as you were sort of saying that the green bit doesn't matter, it's a bond.
Yeah, everything's becoming green. The last numbers I saw were actually it's expanded to $700 billion. So maybe there's a currency difference there, but absolutely, green is becoming the norm, not the exception. Great.
Okay, so don't forget this session and the rest of the series are available on demand here on this website you're watching it on right now. And feel free to invite colleagues that couldn't make it to the session live. Finally, a quick reminder to let you know that the entries for both the Seatrade Awards and the Seatrade Maritime Awards Middle East, Indian Subcontinent and Africa are both now in association with Lloyd's List, are still open. Deadlines are looming, however, so please do make sure that you get your entries in ahead of the deadlines, which you can find on their respective websites. Thank you all for watching and taking part, and a quick thank you to all of the production, marketing and sales team that helped put this series together. It's been a very great and productive month. And until next time, thank you and goodbye.